Traders, and welcome to a fresh week in markets, a week that guarantees a lot of volatility. Look, the big news over the weekend, we all know what that was, is that Trump has issued an ultimatum to Iran that they must open the Strait of Hormuz in the next 48 hours. Otherwise, he will bomb their power infrastructure, starting off with their number one power plant. Iran has responded to Trump's threat and basically said that if he did that, they would bomb all the energy infrastructure in the region, plus water, desalination plants, and IT infrastructure. So look, in a nutshell, obviously we have got a major escalation in this war at the moment. And obviously we've only got 24 hours now, pretty much until the deadline. So around about midday Sydney time tomorrow. The whole focus for the market, obviously, is what happens to crude prices. Now, crude prices, we have seen the market open. We did close last week just below $100 on the open. We did trade up about 2% on a gap open higher. Just above $100, and now we've sort of retreated a little bit below that. So I must admit, a bit surprising that we haven't, spiked up a lot higher so far. So the market's reaction at the moment, I suppose, is best called, subdued reaction. But I'd imagine that as we get closer to the deadline, and if obviously there are no positive headlines coming, this market is going to take crude higher, that is for sure. Obviously the targets, the initial target at the moment and where resistance is around about that $120 mark, where we made a high about a week ago. But obviously if the worst case scenario happens, deadlines met, and then all of a sudden all infrastructure in the region is taken out, I think we can safely say that we're going to go to 150 plus. At those sort of levels, we are talking about, we're going to start breaking stuff in the economy. So it is pretty much a red line in the sand for something pretty bad to happen. And potentially, at a minimum, a global recession will start. So we are at the moment really in a 24-hour time slot where hopefully sense prevails and we don't have that the worst case scenario happening. But all eyes on crude at the moment. It's not rocket science. The higher crude goes, the lower risk is going to go. Now, in other markets, a market that is certainly worth watching is what's going on in global bond markets, because global yields are spiking up. So global yields are starting to price in an inflation shock. And if you have a look at US 2 yields, they're up a whopping 50 basis points now since this war started. They're pushing up towards 4% now. And just a reminder, Fed funds rate is at 3.5%, so they are trading at a big premium now to where the Fed funds rate is. 10-year yields, they've also spiked up a good 40 basis points. Now trading back and more towards 4.4%, absolutely unbelievable stuff. So this market is now pricing in that the next move for the Fed is potentially going to be up now, but certainly, again, bond yields globally are now pricing in an inflation shock. So that is a huge negative for the market. If we have a look at precious metals, they had a disastrous week last week, one of the worst weeks that they've had. Gold down a whopping $500. Now, one of the things that we have talked about numerous occasions during these market updates is that since the war started, gold is not a one-way bet anymore. One of the things that just described what's happening with bond yields, the fact that central bank easing cycle now, the 2-year easing cycle seems to be over, and central banks now will be raising rates. Gold is something that yields nothing. It loves it when central banks are cutting rates. So what is happening with this huge shift in the bond market, and also the fact that central banks now have pretty much finished their easing cycle and will be tightening, is not good for gold. Having said that, look, gold did have a huge week last week of selling pressure. What is happening with this escalation in the war? Gold is a safe haven. So yes, potentially at the moment, and we have seen on the open some buyers coming in and bidding gold back above 5,400. Anyway, moving along, equity space, yes, we did see S&P Nasdaq down about 1.5% on Friday. They did have a gap open down about 1%. They're sort of retracing that a little bit at the moment. But certainly they are following crude. The fact that crude hasn't popped above $100 and spiking, I guess for the equity market and risk in general at the moment, they're sort of breathing a sigh of relief. But look, it is early days on Monday. The main game still hasn't started yet. And again, as we get closer to that deadline, if we're not seeing any positive headlines, I think this market is going to get very, very nervous. And obviously we'll probably see risk trade a lot lower. But look, the key takeaway for this market at the moment is that it is not easy to trade. For the simple fact is that it is very much headline driven, and traders and no one is actually aware exactly when you are going to get the next headline. It could be a positive headline, it could be a negative headline, but generally when they come out, it moves risk in a big way. So you need to be super careful, and certainly, trading with stops, because if obviously you're on the wrong side of a move, it certainly can hurt. But look, the other key takeaway obviously is that it doesn't matter what you are trading, you are a crude trader. And again, obviously, crude going up is bad for risk. For whatever reason, crude does trade lower, okay, that's going to help risk. So keep your eyes focused on what is happening with crude oil. So good luck out there, and we'll check back in with you shortly.